A bit of a defensive bent to the market on a flat day ahead of a holiday for us. So it's a bit of a truncated week, if you will, for our markets. Global markets may not be so, and which is why maybe just this kind of neither here nor there kind of a move, but a bend towards defenses, because you have the likes of HUL, HDFC Life doing well. We'll get to that in a moment. The mid caps and small cap indices will come up on your screen for a moment. Flat for the mid cap index, and it's been that way for a better part of the trading day. 0.25% when we started off, 0.11% when we are ending. So hardly any change there at the broader end of the spectrum either. The advanced decline ratio, I doubt, will show any really meaningful inferences, like 1087 to 993, almost even Stevens. Let's get the heat map up on the screen, and you'll see a bit of a defensive bent here. Look at that. HUL up 3%, Coal India up 2.88%. There is HDFC Life up about 2.4%. A bit of a reaction to the brokerage notes as well, by the way. A lot of them said that the stock might get re-rated. But when you put in then a Tata Consumer, a Bharti and an Infi and an SBI Life, you know that there's a bit of a defensive bend to the market today. What's correcting? Pharma has taken a bit of a stick in the session today because Dr. Reddy's is down, but in the morning even Divi's and Cipla, etc. were down. Reliance is your big culprit. That is down about 1.7. Kotak Bank down about 1.5. So those are the kind of names that have come off in the session today. So like we said, not too much happening in terms of gainers versus the losers. Just the nature of the movers is the interesting part, at least in the large cap space. Tamanna, what about the broader end of the spectrum? Again, very, very flat today.
Very extremely flat, and now in the red, Niraj. So yes, I'd take that forward as a defensive play. Even if you look at the top gainers, not moving as we've been used to seeing, in these markets. We don't see top gainers at up 3, 4, 5%. We've been spoiled for choice. I just want to quickly pull up the sectoral indices before I get to specific stocks that we're tracking this afternoon, simply just to give you a sense of what's working. Reality, and that too because I would say of one or two players is what's working. FMCG, defensive play, IT, ho-hum, neither here nor there. The big losers coming in from PSU banks, PSE, Z pulling down the media pack as well. So all of your pharma, all of your budget plays, beg your pardon, all of your budget plays feeling the heat just a few days before the big event. So I think that's one big takeaway. Specific stocks, I would say let's start with the telecom pack because that's in news. Bharti Hexacom, in fact, the stock of the day in a sense because very positive brokerage notes which has seen that counter going up. Vodafone and Indus are the other ones in focus. Bharti Hexacom there about 7% up. Vodafone on hopes that the Supreme Court, which has agreed to hear a curative petition on how AGR dues are calculated, not if, but how. If that is positive, it's a good news for Vodafone. Indus Tower piggybacking on that. So those are some spots of green. Century Textiles, we were talking about real estate. Real estate, actually even Suntech is doing fairly well today, but real estate has seen Century Textiles in focus. They bought a land parcel in Gurugram. That's worked out well for them. The stock has been up. Hudson Agro was a winner this morning. I want to just see if it's really persisted. And it has. Not too bad. 4.5% up. Pushed by summer season sales, etc. Profit booking is the name of the game. So look at some of the winners from the morning session and from previous sessions today in this week. So from Monday, Godfrey Phillips, Zomato, Z Entertainment, all of those stocks which were running up on various news spaces have been seeing quite a bit of profit booking in trade today. So I would say a cautious approach on a day which is ahead of a truncated week. So you have a markets holiday tomorrow, and of course the Bank Nifty and the Fin Nifty expiry perhaps also weighing heavy on the markets in this afternoon session, Niraj.
Yes, indeed, Tamanna. So interesting, and it's a good time to get in our guests to try and assess what are they doing on a day like this, wherein the next day is a bit of a holiday. So a bit of a short term, and then a bit of a slightly not too longer term, because a lot of positional trades might get impacted because of the budget too. Traders keep that in mind. Kush Bora, founder of kushbora.com, and Aditya Shah of Hercules Advisors join us on the show. Gentlemen, both of you, thanks so much for taking the time out. Really appreciate your time. Kush, let me start off with you first. Is today a bit of a pause day in an otherwise uptrending market, or do you believe now we are getting close to cautious zones?
Hi, Niraj. First of all, very good afternoon to you. Hi, Aditya. Well, I think we've passed that, getting into the cautious zone bit for a while now, we're deep into cautious territory. But that said, the markets are trending higher, so you've got to respect that. From my perspective, my suggestion for anyone who's a positional trader would be to stay out of the markets, Nifty, Bank Nifty, uh, purely, and especially if you're considering a fresh long trade, because, as I mentioned in the FNO show as well, with Samina, which is that look at the risk reward ratio. An upside from here could be 500 points, maybe 700 points, but a downside, if there were a trigger, then you could be staring at anywhere from 2000 to 2500 points. I'm saying an 8 to 10% kind of correction. I mean, that's the kind of territory we are in. So that's from a positional standpoint. That said, from very near-term perspectives, the Nifty 24,500, 24,600, every 100 points that the Nifty moves up, the put bases also keep going higher. So it gets a little difficult to stay out if you have an existing position. So my suggestion for a new position, stay out of the indices, focus on stocks. If you have an existing position on the Nifty or the Bank Nifty, you could continue holding on, but have a very strict stop loss and risk management in place.
Okay. So if that is actually, before I take your picks, Kush, let me ask Aditya as well. Aditya, if you were wearing a hat of somebody who does tactical trades in addition to investing, would you stay on the sidelines ahead of the budget, or are you still going out and taking bets?
Niraj, the best way to invest in the market is to stay invested, because you never know, the market could even run higher from here if the government gives a fillip to the middle class. So in our opinion, we should stay on as low cash as possible. 10 to 15% cash is what we are holding as well, and rest of it is invested in very high quality companies. The only check that you need to do is you need to check the valuations of the underlying companies that you are holding, and if you feel there is sort of a tulip mania that is going on in your basket, then you need to profit book. For example, some of the PSU companies, we've talked about companies like Eveready, where valuations are extremely aggressive. There, people need to profit book. Otherwise, you need to stay invested in the market.
Okay, so that's Aditya. That's an excellent overview from a long term. Best way to stay invested is invested. 100% agree. But can you give us some insight for our viewers right now who are watching and wondering what to do? So let me give you a specific example. Let's pull up Jupiter Wagons. Getting hammered today in afternoon trade. Everyone's excited. You might have the highest ever railway budget capex this time. Would this be a bet you'd take ahead of 23rd of July?
Absolutely not, Tamanna. We've seen all of railway stocks, not only Jupiter Wagon, we've seen Titagarh Wagons, we've seen IRFC, we've seen RVNL rise spectacularly over the last 1.5 years. Of course, the railway story is here to stay for the next 5-10 years. However, a lot of these earnings that are going to come about have already been priced in. Not to say that these stocks won't do well. These stocks will definitely do well over a bit of 5 to 10 years. However, in the near term, they might undergo a time correction where some of them could also hit a lower circuit and give no exit to their investors. So as I said, there's a little bit of tulip mania going on the railways counters as well as defense counters. You need to check out the valuation of these companies and see where you need to profit book. I certainly would not take a bet either for the budget play per se on railway stocks and defense stocks, because we already know the government is going to spend massively on the railway side of it as well as defense side of it. So it is better to stay cautious in both of these deals.
Okay. Yeah, well, but Kush, do the railway stocks feature in the list of your stock ideas today, or are you looking at something else?
Niraj, they haven't for a while. In fact, I agree with Aditya. I think I'm missing Samina here, where, Samina and I, we've had this conversation time and time again. This is just perhaps a momentum play for those who are already invested to stay on. Let me just add quickly to something what even, Aditya mentioned. See, in the past, what happened is that, these stocks have hit, let's say an RVNL, for example. In this year alone, RVNL has hit an RSI of 80 plus twice. One was when the PSU announcement, I think, took place in the parliament, earlier this year, and then, and then once again during the, election result. After both the occasions, the stock dipped anywhere from 10 to 30%. Now, that said, while today the stock is higher from, both these levels and significantly higher, the waiting game there was a lot longer. So from, up until early Jan to mid-May, the stock didn't go anywhere. And thereafter, for about a month, the stock really took a while to actually come to new highs. So that's the point. These stories are here to stay, but it's just that you don't want to get stuck at these levels. So no fresh entries recommended even now. The kind of moves that you're seeing in JWL is perhaps a precursor, perhaps it might turn around. But then, these guys, these stocks, if they do fall another 20-25% from here also, it's not really as surprising. In fact, that will perhaps be a good entry point.
What are your picks, Kush?
Sure, Tamanna. So while I will share my picks in a bit. Just a quick update on Colgate, Palmolive, and Newland Labs. We've had the discussion on this. I think just yesterday. Oh no, it was on Friday. Both these stocks have hit their target, moving higher. My suggestion, if anyone bought these stocks after hearing our discussion, ride on. The momentum is still suggesting that these stocks can move higher. So an update on Colgate and Newland Labs. Now for today, the first stock that I have is CAMS. This stock is now trading close to lifetime highs. Yesterday hit a lifetime high, consolidated, and then moving up again. So for a positional target of 44.40, you could get into CAMS. 4090 is your stop loss. And I think after a long time, I have a short position, which is on Tata Steel. Again, during midday, we had a discussion around this. The stock was at 169. Our short targets were 166 and 163. Closer to the first target, you could perhaps still create a short position for 163. Keep your stop losses just above 170.
Okay. So that's Tata Steel for you. So this is the great thing about Kush. You're asking for 2 picks, he gives you 4. So more in some time from now. Just want to quickly address what's happening with Himadri Speciality. So numbers are out. The stock has also been buzzing. Revenues are up 26% this quarter in Q1. Look at that spike there coming from the numbers. Remember, specialty chemicals might just see a turnaround. That's what has been predicted for a while, that the worst is over. At least Q1 numbers may be showing this. The first cut at least. EBITDA is at 43, up 43% at 192 crores. Margins at 16% versus 14.1%, and profits up 42.6%. So a healthy quarter there for Himadri Chemicals, and you're seeing that spike up. But let's shift focus to telecom, and the stock of the day is Bharti Hexacom. The stock has gained after JP Morgan initiated coverage with an overweight rating. Rucha is telling us why.
Thanks, Tamanna. You're right. JP Morgan has initiated coverage with an overweight rating and target price of 1280, which implies an upside of 20% as of yesterday's close. Now, talking about the company operates in 2 underpenetrated circles of Rajasthan and Northeast. Now, the brokerage house believes that Bharti Hexacom can enjoy stronger tailwinds from subscriber growth and organic ARPU, that is average revenue per user expansion. Now, spectrum cost is also low for the company as compared to Bharti Airtel, and the brokerage house expects around 15% tariff hike for the next 2 years. So lower spectrum cost and increased tariff prices can drive returns for investors holding this stock, and brokerage house expects around 17% CAGR over FY27. Now talking about capex, capex should come off after the 5G expansion in its last year, and tariff hike expected should also amount to reduction in net debt to EBITDA ratio and improve free cash flows. Now all of this can also increase dividend payouts is what the brokerage house expects from the company.
Well, 7.5% up for this one. It's turned out to be a bit of a telecom day, as we spoke about in the morning, that Bharti is up 7. I wonder if Vodafone has also had a decent move, just about 1%, and Indus should come up. Still in the FNO ban, by the way, Indus, but still up 2.5% despite being in the FNO ban. That's quite something, really. Would you invest in a Bharti Hexacom, Aditya?
Not particularly. I would be more enthused by the prospects of Bharti Airtel as well as Jio Infocom or Reliance Jio or Reliance stock, as we said. We've seen that all 3 telecom players have taken a tariff hike over the last month, and I believe this is the start of a multiple series of tariff hikes that these players will continue to take. So I'm positive both on Bharti Airtel as well as Reliance. On my part, on Vodafone Idea, we've seen that they might get some relief on the AGR dues per se. However, the still bigger problem for Vodafone Idea continues to be their massive loss of subscribers that they've really had, as well as the debt burden that the company is really facing. So net only 2 players sustained, and we are positive on both of them.
there. Okay, well, good going really for some of these stocks. Actually, Kush, very quickly, and Bharti Hexacom, Vodafone hasn't gained quite as much as Bharti Hexacom certainly has. Would you take money off the table if you had bought it for a trade?
From a trading perspective, yes, for sure. Near-term resistance is at 1175 kind of zone, so not a bad idea to take some money home, at least partially. The momentum seems to be building up now. Industars seems to be doing well, so that's the one that you want to keep on your radar.
Okay, well, that's the first set of stocks. The first 15 minutes of the show. Some of the top high flyers. We'll talk about some more. There is Bajaj Auto, there is Coal India, and lots more that we have to discuss.
HUL as well is the big mover today after their move to sell their water purifier business, Pureit, for about 600 crores. So yeah, a lot to discuss, but very quick break, and we'll be back with all that and more. Welcome back. You're watching India Market Close, and a quick check on the markets before we move ahead with our next conversation, which is truly an interesting one, because you are seeing a ever slightest recovery in the markets right now. It's been a sort of a very range-bound day of trade, though, one must say. Siddharth Srivastava is joining us now from Midday Asset Investment Managers. Siddharth, great to have you on the show and speak with you this afternoon. I mean, the most obvious and first question is, looking up ahead of the budget, what are we going to see in the next few trading sessions, and how big an event is this really going to be? Do you think that the market has underestimated the quantum of the announcements we may see?
I think the market is well guarded, and that's why we're seeing sort of range-bound movement in the market, especially today. And I think approaching the budget, that will be the nature of the market, because we are looking for the budget, because now that the government has come up with a different sort of composition. There might be a focus, especially on the rural side, and we'll have to see what sort of any announcement, if there is any, on the taxation, and how government is going to sort of continue its push on infra and manufacturing. So I think there are a lot of key points which we'll be carefully watching in the budget, and then I think that will be a trigger point for any significant movement up or down in a lot of sectors and stocks.
Siddharth, good afternoon. So one is approaching the market from a budget and the moves perspective. Two is where the valuation versus earnings growth estimates stand at. I was just love to understand, how are you guys thinking about this aspect? Also, are you sitting on a portfolio of cash currently, because a lot of mutual funds are, or are you guys fully invested?
So at Midday, we don't take cash calls. So most of our portfolio is invested into the market. From a valuation point of view, our view is that obviously there are pocket of overvaluation in a lot of segments like defense, railways, etc. But then there are certain pockets which are attractive. We like consumption right now. We like private banks right now. Even to an extent healthcare, sort of a bit cautious on some of the manufacturing.
To have lost that line. Siddharth, can you hear us?
Names, and also on the towards large cap, even mid cap.
Okay, that's a bit of a patchy line with Siddharth Srivastav. It's cutting in and out. Let me just attempt speaking to him again. Siddharth, can you hear us? Okay. We'll try and get Siddharth Srivastav back, but he was talking about the consumption story, and one of the stocks that is really buzzing today is heavyweight HUL. In fact, it's pulled the entire Nifty FMCG index up as well. Let's just open up and pull up the components of the Nifty FMCG for a second, and most of them in the green, save for a Varun beverage. Now, this is a theme that keeps popping up every few days, and of course, the overarching reason is possibly the expectation of a big consumption push in the budget. Should be as well, considering the inflation numbers which have come in just in the last couple of days, CPI and WPI, both pointing to short-term pain, especially on food products, etc. There might be some move there coming in. Let me just get Aditya Shah's view on this quickly. So two things happening with HUL. One, of course, the overall interest in consumption today as a space, and then the sale of their water purifier business, Purit, for about 600 odd crores to A.O. Smith. But more than what they're going to get for that business is the fact that they want to focus in and prune out non-core businesses. Do you see that as a positive for HUL compared to its peers in the space?
So the first point, I do believe that in the budget, the finance minister will end up at least giving some sort of money in the hands of middle class by the way of some sort of reduction increase, or per se some sort of increase in the minimum taxation limit. They have to do it this time around. That's the best time to do it. First point. So the major beneficiaries of them would be the entire FMCG pack per se, and that's why those stocks are really buzzing right now at this stage. Particularly for HUL, the demerger of their water purifying business is really positive, because it now sends a message to the market that they will take out all the non-focus areas of the business and concentrate purely on their own FMCG business. So this is really good for the company and positive for the stock per se.
Okay, well, 3% higher for this one, and FMCG by and large seems to be doing okay. So that's the key point to monitor as well. Kush, you will take any trades here?
In the FMCG space, Niraj?
HUL or FMCG in general, yes.
HUL, not from a trading perspective. July of 2021, the stock was close to these same levels, 2700, 2770 odd levels. The whole of last 2 years, this level's been, a stiff one to cross. So not from a trading perspective. If I were to trade, Colgate is one stock that we've already discussed, but to add to that, Tata Consumer Products. We've had 8-9 sessions of consolidation and then a breakout today. I think this stock is headed towards 1200 in the near term, perhaps even at 1225, and the stop loss is 1150, which is the resistance level of the last 8-10 sessions. So Colgate and Tata Consumer are the two stocks that I have on my radar. HUL close to the resistance, so perhaps a book profit on a trading position.
Okay. Well, that's HUL for you, 2.5% higher in trade. And remember, a clutch of these FMCG names have done well, and FMCG has done very well. At the contrasting end, media has had a really bad day today. You look at Z, which is corrected about 3.5% today. You look at Network 18, you look at a clutch of other names, and I think media stocks have just come off the boil completely. But I'm told Siddharth Srivastava is back with us. Siddharth, sorry we lost you. Maybe you finished the point that you were trying to make. We, of course, wanted to ask you about what we do with consumption per se, but I think we lost you midway through your point. Can you hear me, Siddharth?
No.
Okay, I think...
Sorry.
No, I think we have him. Siddharth, if you can hear us, what's your view on staples and consumption? Do you think there could be a push in the budget, and could the prospects be better for them if the rural income picks up? Okay, I think there is a bit of a problem with the link. We'll try and rectify that. I think what we do is maybe just take a quick break. We come back from a break. We try and talk about Bajaj Auto. We try and talk about Coal India, which is an active stock as well. And of course, try and talk about some more buzzing stocks in the session today. Stocks like Vascon Engineers, JM Financial, IRB Infra, Suzlon after a while has had a very good move too. So some of these stocks are worth talking about. We'll do that on the other side of this break. Stay tuned.
welcome back. You're watching India Market Close. Let's talk a bit about the top Nifty gainer today on an otherwise tepid day in the markets. Coal India, the stock is up 3%. Largely in part, one would say, because of a note by Phillips Capital, which is quite gung-ho about the Coal India stock. But what more about this company? Now, let me go across to Harsh, who's done a bit of a deep dive on Coal India. Harsh, let's start with what Phillips Capital is saying and why investors are bullish on Coal India right now.
Well, Tamanna, first off, just with regard to target price, let me put that out of the way. 611 rupees is the target price they've given. Valuations I'll come to. And also, that's roughly a 20% upside from here. But just with regard to where Coal India is at, it's been a six-bagger since 2021 January. If I include dividends, of course, and it's fair to include them because part of the returns. And in a world of ESG investing, essentially this non-ESG stock has given an Nifty 50 PSU non-ESG stock has given absolutely stellar returns. Now, just to kind of flip it around and try and understand, Coal India itself fulfills around 79% of India's coal production needs. It operates over 300 mines. Now, just to kind of understand the scale of operation which we are talking about here, for around 3.2 lakh crore of market cap. In terms of grades of coal, pretty much into everything, but let's talk about its clientele. Largely energy, steel, cement manufacturing, of course, steel, coking coal, cement as well. A lot of that also getting covered, but energy is really where Coal India gets a bulk of its offtake goes to energy. In fact, 80% of its offtake goes to energy. And currently, let's talk a little bit more about energy because that's where that's probably what's driving the stock higher as well. Peak energy requirements in FY24 was 243 gigawatts. Is set to rise to 280 by FY27 and 400 is the estimate by FY30. So keep your eye out on that. It's a large deficit that needs to be met. 88 gigawatts of thermal capacity increase in the next 6 to 7 years is anticipated, which should and ought to lead to a larger production for Coal India. Just in terms of the production catch up, around 400 metric tons of million tons, I stand corrected, of coal incrementally will be required for India. If we calculate 80% of that roughly, there you go, and 80% of that is met by Coal India roughly. And therefore a large opportunity both in terms of production as well as in terms of demand. Cement, other sectors also will bring it good revenue because the bidding process in some of the other sectors helps it get better realizations, and you're expecting capacity in cement etc. to also double up, and that should also help in terms of the demand. Now there you go, just in terms of volume, what Phillips Capital is suggesting, where will volumes go? You're looking at an 8% CAGR on volume. Now just in terms of realizations as well, you're talking about 555 rupees per ton as the current realization. That is going to come off slightly. It's going to come to 500 rupees and then bounce back higher. So maybe realizations will impact EBITDA in this year. In terms of diversification, not just into energy, they're getting into power, coal gasification as well as fertilizer chemical, ammonium nitrate, coal to ammonium nitrate as well as fertilizer, and they're going to spend 50,000 crore in the next 7 to 8 years on these new businesses. So plenty of new levers which they're trying to unlock. Why has the stock run up so much? Well, it was trading at a PE of just 5 back in Jan of 2021. Dividend yield was extremely high, nearly double digit plus. We're looking at volume growth which has been extremely strong over the last couple of years, and realizations have gone up from 377 per ton to 555 per ton, and all of that has led to the stock price increase. Now just in terms of where we are today, 27,000 odd crore rupees of cash. In terms of market cap, 3.2 lakh crore of market cap. That's roughly translating to 44 rupees per share of cash. This will support dividend going forward as well. So your dividend yield will continue to remain quite healthy. You're expecting EBITDA moderation. We spoke about that. 500 per ton of realizations going forward. So that will be one thing to watch out for. Also, your EBITDA is expected to be at 40,000 crore in FY25, but to rise to 50,000 crore, back to 50,000 crore by FY27. So judging that just in terms of valuations, if we were to extrapolate, these are of course the risks, but the valuations therefore trading at around 6.5 times in terms of EV to EBITDA. You're looking at international price fall as a possible risk, faster shift to renewable energy also as a risk, and increased production from captive mines. That could also be a risk, especially for steel and cement, where demand for coal is strong.
Okay, so that's quite a elaborate deep dive into a stock which is buzzing today. Thank you for that, Harsh. Let me get a quick view from Aditya Shah and Kush Bora on, I would say, the biggest winner of the day, at least on the Nifty. Aditya, all things considered, do you think Coal India is a steady bet right now?
Yes, definitely. So one of the PSU companies that we really like, the dividend yield is good. The stock price is not too expensive, even though the stock price has really risen over the last 1.5, 2 years, and the business is robust and really very strong. So in my perspective, this is one of the PSU companies that I really like.
Okay, so it's one of the PSU companies you really like. Kush, at these levels, do you like Coal India at 513?
Just to highlight how emphatic Harsh's entire presentation was. I think the last couple of percentage points move came about just because of Harsh's presentation. Fabulous one at that and quite in depth. I really enjoyed that. From a near-term perspective, 520 was the resistance. I think that will be taken out. The data also suggests the call option open interest. There's some shedding at the 520, 515 levels. So I think the base is there for the last 4 weeks. The stock's been making this base. Now I think the time has come for the stock to move higher from here on. I think you're looking at a 545 and a 570 kind of a positional move from here on. 495 is where you'd want to place a stop loss, or maybe just a little under that. So positionally, it's gearing up for a big move.
Okay, so Coal India is gearing up for a big move. Let's go across to Puneet now for Bajaj Auto. Now, Bajaj Auto is another interesting one. It's come off its gains and the first sort of spot that we saw when the numbers came out. But the numbers on the face of it are good. Revenue, profits, margins all have beaten street estimates. Puneet joins us with details on what has worked for Bajaj Auto. Yes, please.
Yeah, thanks for that. So good, strong revenue growth of roughly 16% in this particular quarter. Margins have also crossed the 20% mark, and that has been one of the mainstays that company has been around that 19 odd percent mark. So that's one of the positives. Net profit also grew by roughly 20% to come in at roughly 1988 odd crores. Now, of course, this was driven. The revenue growth was driven by vehicle sales as well as spares revenue being the highest in one particular quarter. Margins have been driven by better realization as well as cost reduction, and this is also offsetting any kind of losses that they have on an EBITDA level for the electric two-wheeler subsidy, which has the Chetak products as well. Now, domestic business has grown for the 9 successive quarter in terms of volumes on a double-digit basis. They have said their export growth has also grown due to positivity on the LATAM market. Now, this is key here because Africa was one of the problems in the last year, and in this particular year as well, there's been no growth expectations that the management has quoted from Africa. So other export regions such as LATAM as well as Egypt will be one of the mainstays. They also now have an assembly line in Brazil which has 20,000 units capacity, and they mentioned that CV units have also crossed the 1 lakh mark, and we saw those in the numbers which they reported in these on the first of every month for the past 3 months. Surplus cash or roughly 16,000 odd crores is a key positive, and they've also invested roughly 500 crores in the financial subsidiary of Bajaj Auto itself. They've also approved appointment of Sangeeta Reddy as one of the additional directors in this particular quarter, and the management con call is scheduled at 6:30 in the evening today, and commentary on the Pulsar 400 dispatches, the Chetak, the cheaper Chetak, which is the most cheapest product, as well as the new CNG bike will be key going forward. Back to you.
All right, so that's the story on Bajaj Auto. Kush, very quickly, view on Bajaj Auto?
Hold, but only till the levels of 10,000. Multiple times we've seen resistances that might perhaps once again, fade or, have a failed attempt at 10,000. But up until 10,000, I think, you have a clear path.
Okay. All right. So Bajaj Auto, Aditya, are you bullish on Bajaj Auto? And let's look at the auto pack as well, because the whole story which had triggered Maruti, and this is something that my colleague Tushar reported earlier in the day. You can find that story on the website of ndtvprofit.com. Is that UP has actually extended its EV policy, where it gives some concessions in road tax as well as registration fees to electric vehicles and hybrids, bringing them on par. They've extended that for about 2 years. It's going to be interesting to see if you see a further run-up in any of those OEMs or automakers. Meanwhile, Apollo Tyres is having a runaway day today as well. Aditya, just your view on Bajaj Auto and the entire auto pack right now?
So within the two-wheeler space, we are positive on Bajaj Auto, TVS Motors and Eicher Motors. Bajaj Auto's latest offering, the CNG bike, could be a very interesting offering within the space, and that could spur other OEMs to also follow and launch the CNG bikes per se. Anyway, the Pulsar and the Chetak, we need to see how the growth in those two segments is there for them. However, given the cash pile that the company really has, and about 10 to 15% profit growth that we are expecting, we are positive per se within the two-wheeler space. Within the four-wheeler space, we are particularly positive on companies like Mahindra and Mahindra because they have lined up investments within the EV space and within the IC engine space. So in my view, they will do pretty well. But the larger opportunity lies within the auto ancillary space, like the light makers or particularly the wire makers. That's where the real opportunity is within the auto sector.
Okay, so that's the take on auto coming in. Okay, let's see what else is moving today. Alembic Pharma up about 10%. Natco Pharma also doing pretty well, up about 6%. LIC showing a sharp move, about 4.5% to 5%. What's also notable is what's happening with IT stocks. Let's just pull up the Nifty IT and the intraday chart as well to show you the kind of recovery we've seen from lower levels. Now, IT has had a blow hot, blow cold couple of sessions after TCS, HCL Tech, but hasn't been able to sustain that momentum. The Nifty IT right now, after that very decent recovery in the first half of the morning, pretty stable right now. Aditya, are there any IT companies that you would create positions in at this point ahead of more numbers as they're awaited and we go through result season?
As I said, between the large cap IT space and the mid cap IT space, I prefer mid cap IT space. But having said that, the mid cap IT space is not too cheap. They're all expensive stocks out there. Some of the stocks that we really like is L&T Infotech Mindtree, L&T Technology Services, somebody like a Tata Elxsi, or even to some extent Persistent Systems and KPIT. These are product-based companies which have niche in their own spaces. You have to go company by company within the IT space and then see how it goes. The results for Tata Elxsi were not that great, but the future guidance is somewhat stable and they're pointing out to a recovery early next year. So positive right now at this stage on all of these companies.
Okay, what about you, Kush? An emphasis has been basically the runaway story for, among the IT pack. Do you find it interesting at these levels?
I do, Tamanna. In fact, we did discuss this stock last week. Has by and large surpassed all the targets that we had mentioned. I think there is some conjecture as well around the MSCI inclusion, so that's also giving it the further fillip. But I think if you have an existing position, you should continue holding it till 2850, 2880 kind of levels. New positions, well, the risk reward may not be as favorable. So while the momentum could continue, this is more so now for those who have an existing position, or if you want to play the last 80, 100 odd point kind of move with a tight stop loss of about 30 rupees.
Okay, so emphasis in focus. The other stock which is definitely in focus is Asian Paints. All eyes on Asian Paints as their numbers are expected tomorrow. In fact, Mahima is joining in for a preview of what you can expect from Asian Paints.
Tamanna, so Q1 FY25 for Asian Paints is expected to be a muted quarter. Now, in terms of Bloomberg estimates suggest that revenue will be up around 1.7%, EBITDA will be down around 7%, and margins are expected to squeeze to around 21% from 23%, and overall net profit is expected to remain down by 9%. Now, in terms of what to watch out for, well, demand and competitive landscape is something that will be something to watch out for, and in terms of revenues as well as the entire demand space, well, Q1 FY24 was a higher base, so the demand is expected to remain muted compared to that. In terms of operating leverage, well, there's expectations that lack of operating leverage will be there during the quarter, and in terms of volume growth, single-digit year-on-year volume growth is something you can expect. In terms of value growth, the value growth will be impacted due to weak mix and price cuts that have been happening since the past 10 months. Recent price hikes, however, have been taken up, and they will be post 22nd of June. Now, in terms of expenses, higher employee cost and advertising spends on the basis of intensity in competition is expected. So basically, overall commodity prices, demand, and even the election impact on Asian Paints is something that will be on the watch out for Asian Paints.
Okay, Mahima. So that's the input as far as Asian Paints is concerned. Asian Paints also recovered actually from its lows of the day. If you look at an overall theme, I would say that consumption is definitely the big one that we're seeing. And Aditya, let me get your view on that consumption theme. You spoke a bit about HUL earlier, but let me bring Asian Paints too into the picture.
In my opinion, Asian Paints stock is a little bit expensive per se. The volume growth is something that you have to watch out for. And again, as we already know, Grasim is entering into the market, as well as JSW Paints is coming in. So the competitive intensity and a flavor around that will be really important to watch out for. But I believe Asian Paints is Asian Paints, and they will continue to be the market leader not only this quarter, but for the next 5, 10, 15 years. So there I don't have really any problem per se. However, let the valuations cool down a little bit, and there could be a good entry point between 2,500 to 2,800 on this.
All right, so Asian Paints in focus. We're talking about Eveready as well. In fact, Eveready has spoken to us today on NDTV Profit. We'll see if we can quickly play that conversation out for you in just a few minutes from now. They have got one new product that they've put out, innovative kind of a flashlight. But the key point I would think to take away from that interview is how the Eveready MD is also expecting the government to act on consumption in the upcoming budget, where there will be a boost to consumption. Now, will that come in the form of higher payouts to certain segments in rural India? Will that come maybe in the form of more tax breaks? We'll have to really see. But let's listen to a slice of that conversation.
In the flashlight business, our basic offering is illumination, powered by batteries that makes lighting a mobile product. Now, that is the very basic format. But beyond that, there are requirements which consumers feel that they need, and that is how we keep on adding features to that basic product of mobile lighting, whereby their requirements are fully met. The current product about which we were discussing today is one such product which allows for a panic button along with a flashlight. So in the event somebody is helpless for whatever reason, being elderly or being a deaf person or being a child, he or she is in a position to just click on the panic button and it will give out a loud siren, and that is how we call it the siren torch, and attracting for attention whereby help would come. So that is the product. We think it's a very unique product, and it is not there in the market as of now, not only in India, elsewhere as well. So we are storing a lot of hope for this product.
Okay, and coming up with the talks about the lighting segment last quarter also, and even previously, the growth around the lighting segment has been slightly subdued due to rural demand not pacing up and other factors. So with this product, what kind of revenue are you expecting, and what kind of contribution are you expecting to the lighting segment?
So we do two kinds of lighting. One is the LED lighting, which includes lamps and all that stuff, luminaires, and we do flashlights, which is also the vertical that provides lights. Flashlights was very muted last year because of the rural demand was weak, and we also had some internal challenges related to our distribution. So we feel that with the kind of innovative products that we are bringing to the range, we are quite hopeful that that period of muted demand is over, and we should now be able to press on the accelerator for growth, and flashlights vertical will play a more significant role in the overall turnover pie of the company.
That's Eveready for you. Okay, 9 minutes left for the markets to shut shops. A few stocks have spiked up in trade. Okay, so Vraj Iron is up and up quite significantly. Aegis Logistics has gone up in the last few minutes of trade, so do watch out for that as well. There is strength in Iris Clothing. I've never heard of that stock before, I'll be honest, but that stock has had a bit of a gain. Keep that in mind. Stanley Lifestyles for the last few days has had a serious move. Actually, if we can pull up the 7-day chart for a Stanley Lifestyle, and you will see what I'm talking about. Unless I'm very wrong, this stock has had a really good run in the last 6 or 7 days because it keeps on popping up in this price volume buzzers. Can we pull up the 7-day chart of Stanley? Even in today's session, by the way, the volumes have looked good. 9% in the last 7 days. So really good move on that one too. And the new listings, Bansal Wire, D-Development, etc. have all done very well. Kush Bora, any of these, and in particular Aegis Logistics has had a few days now wherein it pops up on this volume and price screen.
So, Niraj, frankly, that's the only one we can talk about, and the others are fairly recently listed and fairly sharp moves on those with low volumes, comparatively low volumes, at least I must say. Aegis, yes, spot on. That's a good find. Week on week, the stock has done very well, and there have been bouts of profit booking. There have been bouts of consolidation. 20-day moving average respected for the most part of the last 3-4 months. So I think this is a very steady kind of an up move. Does build confidence. So from a positional standpoint, I would say one can consider this one. 960 and 990 are the two levels that I will look out for on the upside from a trading perspective. 845 is strong support, so that will be your stop loss. So Aegis Logistics, all the corrections and the consolidations put together makes for a good up move from here also.
Okay. Well, one of the reasons why Vedanta, despite having a higher QIP price, is down because this must be the share placement of the upsized. They've upsized the share placement to $1 billion now, which I think was the actual approval amount. Me and Tamanna were just talking about it, that in the earlier board meeting, they had taken an approval for 8,500 crores. I think what they launched yesterday may have been a bit lower. Now they've upsized it to about $1 billion. And therefore, there is maybe this belief of this higher supply and a higher number, which might be leading to this. But Aditya, coming on this one, Vedanta, fundamentals is one thing, but the fact that the company priced its QIP at almost, actually not even the current market price yesterday, but at a higher than the closing price yesterday, believe that they would have thought of strong demand. Any thoughts on this one fundamentally?
Niraj, remember in 2020, Vedanta tried to delist at a price of 90, and today they are doing a QIP at a price of 455. So that's how market cycles really work. And business really is in need of cash per se to service the huge load of debt that the company has really got. So in my opinion, I will try to wait for the situation to get clear how the company will service the debt. The underlying businesses are really good businesses that Vedanta really holds, but the valuation of the stock is not really cheap at this moment in time. So I'll try to wait and watch and then see how it goes on Vedanta first.
All right, so wait and watch on Vedanta. Vedanta in focus. Let's look at what other stocks are in focus as we wind down to close and frankly losing steam. I'm wondering, Kush, if there is any kind of a BTST or actually skipping the day tomorrow kind of call or position that you would recommend. There's so many things up in the air, the results coming in, there's budget, etc. But are there any 2 or 3 stocks that you would look at specifically for a positional trade?
Sure. So, Tamanna, we've already discussed Tata Steel as a short call. So I think, I will maintain that. Apart from, an up move perspective, a couple of stocks that, are on my radar, closing or rather at the high point of the day towards close is CAMS. The stocks had a stellar run, doing rather well. So, this one's also, on the radar. We've already discussed that continues to move higher. Balrampur Chini has added significant OI, I think about 10-12% of open interest. We are seeing some unwinding at, the at-the-money calls. So 465, 475 could be the next levels to watch for on Balrampur Chini. 440 is the stop loss. So some of these names, but my suggestion would be to keep a hedged position along with all the longs that you have to take, either a short position in, any stock or at least, a few puts along the way, at least for, a couple of weeks to come.
Okay. Well, so those are some ideas from Kush Bora. Wow, there is strength in Avascon Engineers. That's up about 13% in trade. Wonder if it's gone up a bit more because it was anyways up for a better part of the day. But now, yes, has spiked indeed, 81 or 82 for this one. Infrastructure players typically would be active ahead of budget, but this is not just that. I think there must be something more to this. But 13.5% higher for Avascon in the session today. So pretty good going. Century Textiles is the other one, been up since morning. Aditya, do you track Century Textiles fundamentally?
No, Niraj, I don't track this company, so will not be able to comment.
Okay, but remember, they've bought a parcel of land in Gurugram with a total developable value of, I think, 1,800 crores. So that's probably one reason why this has done well. India Cements is now firmly above the price of 323, 5% higher yet again. But today, a lot of cement stakes, cement names, Heidelberg Cement, Century Textiles, India Cements, etc. A clutch of them are up and about in the session today. Aditya, are you constructive cement? And if so, what stock would you look at?
Definitely constructive cement per se. Because the government is pushing massively on the infrastructure side of it, and the major beneficiary apart from the infrastructure developer is going to be the cement players per se. We have 2 philosophies running here. Ultratech Cement is going to do extremely well over a period of next 3 to 5 years, it being the market leader. So bullish on Ultratech Cement. Then we have to look at the regional players per se. Within the regional players, we like something like a Dalmia Bharat per se, or an Ambuja Cement also really works out. So cement, again, it is a very commodity type of a company, a commodity type of a chemical. So what you need to really do is you need to either focus on the larger players, or you need to focus on players where on regional players where they are strong in some region or the other. Like Dalmia Bharat is very strong in the eastern side of.
Got it. Well, gentlemen, both of you, thank you so much for taking the time out and being with us on the show today. Really appreciate your time. Let's start wrapping up the markets. Minute and 30 seconds left. Very quickly, just the Nifty and the market breadth and then the heat map. So flat as flat can be. The market breadth will also be even Stevens, I would reckon. Even Stevens, exactly even Stevens, maybe marginally in favor of the gainers, but nothing too much. A far cry from what it was in the morning. And now get the heat map up on the screen. I doubt too much has changed, by the way. But yep, the same set of stocks. Reliance continues to sell. Kotak overtakes Reliance. Shriram Finance overtakes Kotak. So that's the other thing. Hindalco is down. NTPC is down. Commodities also seem to be taking it badly. Say for Coal India and BPCL, which are already thwarting that. And then the defensive bent with HUL, Tata Consumer, HDFC Life, and some IT names, Tamanna. That's the nature of the beast. But Bharti Airtel signifies why it's a telecom day today. Airtel, Hexacom, Vodafone, Indus, you name it.
Yeah, all of the above. Consumption, definitely one theme which is coming in. Asian Paints also ticking up ahead of its numbers. Grasim, You mentioned Tata Consumer, but look at it, Britannia as well in the top row. So I would say that's definitely one theme coming in. Let's just quickly pull up the sectoral indices just to give you a sense of what's happening, and then the top gainers and losers in the BSE 500. Realty has had a good day. FMCG, like I said, is one which is to mark out for. IT has seen a recovery along with consumption. On the losing side, apart from media, not really counting it because very few stocks in that index. You have PSEs and pharma, which are really losing out. Some noteworthy, let's see the top gainers and losers on the BSE 500, and noteworthy stocks. One I would say is Alembic Pharma. Not sure why it's running up to this extent today, but Alembic Pharma doing well. The whole oil and gas space, Supreme Petro, Chennai Petro also has been doing fairly well. Century Textiles on the back of that land purchase in Gurugram, and that's why you're seeing some sign of life there, up about 6%. But on the losing side, I would say a bout of profit booking. Yesterday's winners or today's losers. Godfrey Phillips, Zomato, definitely in that
Oil
list.
India.
Oil India as well. Yes, absolutely. Oil India in that list as well. Even rails have been having a pretty bad day. Ircon, and if you just see what's happened to Jupiter Wagon, was about down 6%. I'm not sure where it's closed right now, but that's the kind of theme you've seen. Your pre-budget regulars and favorites getting a bit of a drubbing down ahead of a market holiday. We'll have to pick this up on Thursday and see whether more positions are built. I reckon, Niraj, results will be in focus, and maybe if there is some more clarity or some specific cause of what to celebrate in the budget, then that will be in focus. I think for the markets right now, the biggest concern is whether there's any action on capital gains tax or F&O trading. That would be the bigger focus than just the budget announcements.
Yeah, most certainly. We'll get to know about that in about 5 working days from now, or maybe 7 days from now per se. But a lot of pre-budget shows lined up on NDTV Profit and the NDTV network, by the way, both on TV as well as on digital platforms. So keep an eye out. But for now, from Tamanna and me and the team that put this show together, thanks so much for watching.